All right, welcome back. So I've been thinking I'm going to put a series together. It's going to be called the Playbook. So what I'm going to be doing is more just sort of downloading sort of my thoughts on how I approach the markets, what I look for on a day-to-day basis, like the price action that I'm looking for. As the market's changed, as it has, the last quite a few years, we seem to be seeing like different market conditions every 6 months. We've got COVID, we've got war, we've got trade wars, all sorts of things. But every time, we've got seasonal differences as well, like Northern Hemisphere summers, Southern Hemispheres. So when we have these sort of seasonal changes, we also need to sort of adapt our approach. Like the market does change in these little tiny ways. So we always need to be refining our approach. So what I want to do is put together a series of how I'm approaching the market right now. And it's going to be more... There's going to be quite a few series in this. I'm going to put into like a little playlist as well, and sort of the order that I think it should be viewed in. But right now, I think the very first video that we're going to come across is going to be like how I approach the markets based on the higher time frame. So I'm going to go through some charts. I'm going to point out things that I'm looking for as well. So grab a pen, grab a paper, or type down some notes, pause the video, and just sort of see how I go through the little things I'm looking at, the candle bodies, the wicks, the structure of the market. And I can have two biases. I can have my overall bias of where I think this pair could be going, but then I could have my bias for the session. So I trade on the lower time frames. Okay, so usually my entry time frame can be 30 minutes. Sometimes I can wait for just look at how the candles are forming on the 5 minute. But really what I'm looking for is just zones. I'm looking for tradable areas, and then if it's with the trend, I can be a bit more aggressive in my approach. But I'm just going to dive into the charts and let's just take it from there. Okay, so we've got pound AUD up here now. So I'm just going to do a bit of a clean chart. I'm going to do a bit of a top-down analysis. It's what's the date? The date is 4th of July. 2022 right now, so you can see, maybe I can't put my clock on here, but you can see I'm not in replay mode. If I go to the 30 minute, you can see the time here, down here is we're nearly at market close. This is UK time, 9:30 p.m, 4th of July. So what I'm going to look at, I'm going to sort of assess what happened here on this day, and then I can also just have a look at sort of where I think it's going. Okay, so these are going to be some pretty key concepts. So I'll start with a monthly. Sometimes I might do my monthly analysis and my weekly analysis more to maybe the start of the month or the start of the week. But most of my day-to-day analysis is going to be done on my daily and 4 hour. But I do want to keep an eye on what's happening on my monthly and weekly. So just looking at this monthly, if we zoom in, we can see the last 3 months since April, May, June, and then July is only just opened, but we can see more sideways. We've got a huge candle here. So this big candle contains a lot of volume. So it almost didn't have any up wick. It just opened at the start of May and just dropped. And different factors with that, mostly to do with this war most likely, and interest rates going up and political things. So, but what we can see is we came down, we stopped. Why do we stop here? We can see across here we've got a bit of a support. So there's some candles closing here. We've got candles closing here. We've got candles sort of rejecting this area. All across here is going to be a pretty heavy rejection zone. So it's going to take something pretty significant to be able to break through all these wicks, break through here before we can start tacking to these lower areas. You can see we've got nice clean candles. There's another heavy support area here. But there's a lot of empty space through here. So when we can break down, maybe this is the month that's going to do it. Maybe it will break down, break below this wick and start attacking these lower areas. Or maybe this is going to hold a support and we can close above here and then start filling some of this clean candle again. And we can look into the detail in these candles as we go through. But the main thing on the monthly is not giving me anything, right? It's just the bullish candle, bearish candle. This next bullish candle is a little bit smaller. The wicks are a little bit lower. This wick here is a little bit higher than the previous one. This month has opened, and in how many days this month? Only two days so far for this month, and we've already gone up and filled this bullish candles wick. Okay, So we're already gone up and we're seeing some sort of rejection. And we can see that most of these candles, most of them, contain a top wick and a bottom wick. So we're going to think that on this month, we've already seen some up momentum, and most likely we're going to see some down momentum as well. So we just need to sort of see the order that it's going to happen. So I'm going to go from here. Not really giving me much. I could do my levels on my monthly, but I'm more interested in doing them on lower time frames because I think that's going to be a little bit more, for me personally, I think it's going to be a little bit more detail, and I'm going to have my zones a little bit more refined. So weekly, okay, so we can see, this is sort of just telling us what the last couple of months have been doing. We're in a range. We're just in a range, so we're just going sideways. So I might have to do a bit more of a range play sort of approach to this. I can find trends on a day-to-day basis within this on the lower time frames, but on the higher time frame, we can see we're definitely this is a rejection area. 1, 2, 3, 4, 5, 6, 7, 8 wicks so far, all up in this area. So what I'm going to do is I'm going to go ahead and just put a little line there, just to sort of remind myself where we are. I can see if I drag it to the left, it does tie up with these areas. And let me just zoom out a little bit. Yeah, and this stands up pretty well. 1.78 seems to be a bit of a key level. That's, it stands out, right? So we can just put a horizontal line there and say, that's straight away without even doing too much analysis. That's a resistance area. So got to be careful trading up into this area because we can have some heavy rejections. It would be nice to sort of see it close above here before we can have some continued upside. But we'll just see, okay? Down below, we can sort of see rejection area here. And then we've got a bit of a support. So we've been, the last 4 weeks, have been drifting higher. So on the lower time frame, maybe the 4 hour, we can actually do some structure and let's just find out what the market's building to. I'm sure if we can find a bit of a trending environment, then it can give us a bit of an idea on how maybe some areas that we could be looking to take buys from, going with the trend, or even some maybe counter trend opportunities if we get the relevant price action from resistances from here. Okay, so you can sort of see how I'm building my bias with my top-down approach. We've been bullish the last 4 weeks, so we need to see something to switch our bias or make it easier for us to take sells. So going on the daily, this is where most of my work is coming in from, right? Going to this daily time frame, this is where I'm looking at the detail a little bit closer. Okay, so you can see, I could refine this a little bit, maybe make it a little bit lower. What I like to pay attention to is the closing prices, and then also these wicks. But usually when the price is coming up from below, it's going to hit the closing price first before it can get into, or closing and opening prices of these wicks, the bodies, before it can start to approach into these wicks. And these wicks they're rejection areas. Okay, so price is pushed up and rejected, and that's what's left this little wick. But these little wicks can become targets for future price to fill. It happens all the time. You notice that when we have a bullish candle like this, okay, like this one, and it's got a nice wick to the upside. If we're coming from support, then the next candle is likely to fill this wick. Okay, and then once we can start to close above it like this guy, then it leaves another wick, and that wick gets filled in momentum up to our resistance. So we can see, resistance. It's clear that we're at a resistance. This is a risky area to be trading to, but it's like a magnet for price as well. It's wanting to drift price up to it. What we can see is even on the daily, we're starting to see some resemblance of bullish structure, as in we're making, these are little highs. Here's a low. This is a higher low. This is a higher low again so far, and we're starting to push up like that. So nice trend, nice trending mark on the lower time frames. 100% there's a trend, but is also on the higher time frame. This is part of a bigger range that we've seen on the weekly and the monthly. So things to keep in mind of. Go to the 4 hour, and what I want to look at is if we're going to take buys, I'd rather take a buys off of key structure, price, areas where price has actually done some damage, some swing points, and we can get quite easily lost in all this noise. You can see these little vertical lines are the day separators. So on the 4 hour chart, you got 1, 2, 3, 4, 5, 6 candles makes that 24, 4 hour candles makes up the 1 day. So you can sort of like just give yourself a little bit of a an idea of like where we are in the weekly. Like this is just the first day. This is Monday, but then last week we had Friday, Thursday, Wednesday, Tuesday, Monday. So if I zoomed in, I could sort of get like an overall what happened last week. We sort of drifted down, and Friday we had like a big push up. So, but the main thing here, well, the detail I'm looking at is I want to look for structure. I want to look for where price has been making higher highs, higher lows. And sometimes it's a bit messy. It's not like it's clean, but bear with me. So what I want to look at is I want to just pick a starting point. Like that could be my starting point. It's the lowest area on the chart that we had, like, you know, price was doing some sort of business up here. And you could say like this was also a trend, but then this area here was like a full correction in price. So it's almost like price is reset itself at this point. So let's just call this our starting point. Then if we have a look, price shoots up pretty strong. Okay, forms a high, comes down, forms like a series of little lows. But let's just start pointing out some of the more relevant areas. Okay, now I want to stop here. I want to stop there because I can see price has shot up from this area, huge bullish candle, huge gap in price. So like, you know, if we got candles starting to close under here, okay, like if we got, you know, price comes down sort of in its own little wave, but if we had like a candle starting to close under here, it'd make our job quite easy to be able to think that we could then start to fill this clean candle. We've got a little rejection point here, but this whole area is almost like a range in itself. So anywhere we've got like a resistance and a support is going to be a range. If we got something closing inside this range, most likely we'll go to the bottom. It happens over and over and over. But understand that concept. When we've got a resistance and a support, or a support and a resistance. So when we push up, okay, we can see that we've got this huge candle. So this candle here, I'm paying quite a lot of attention to, this bullish one, because in itself as well, that in itself is going to be a range. Okay, so sorry, there we go. Like, and you can see how long that took for price to, you know, rejecting off the top, rejecting off the bottom, rejecting off the top. But the whole time it's doing that, it is building these higher lows. So it's building pressure that is eventually going to break. And once it closes above, leaves a candle. This candle here moves pretty quickly. Notice like this candle here sort of replicates these clean candles. So price does replicate itself. Like again, like this is thinner areas of the market where we don't have candles sort of consolidating with each other. Then price pushes up, makes a new high, and I really like this move here. So this high down to this low and up to here, because one reason, the move out of here created a new high, and then like a higher high and higher close. It's important that this candle closed higher than like all of this range, because then it's telling you that price is moving into a new area, new price area for price then to either do what it wants to do, consolidate, trend, however long it stays there is up to the market, but it's telling you that it's left this area. Now, if something closes back inside of it, then we can think, oh, you know, we might be starting to range again, or get stuck in a new area. The areas I like in this, okay, so if this created the high, like sort of the last high before it broke above this wick, what this means to me, this is structure, okay? So this is going to be a first level of structure. Now, how I draw this is, for me, like I use different colors. Like I do change things over time. That's why I think it's important to do this playbook series, just to sort of keep you up to date with like my current approach. I'll use a color, right? I'll use just like for hours above, like hour, 4 hours, anything less than like daily, I'll use a blue zone. If it's like anything like less than an hour, like 30 minutes, 15 minutes, 5 minutes, I'll use a red zone. Anything above, like daily and upwards, I'll use like a golden zone, like pretty light, or yellow. Anyway, so what I can see is like this. You've got to pay attention to this bit. You can pay attention to that. We had, you know, a series of candles pushing up. This is a resistance candle, this red one. We push down. We form a support with this blue one. This second blue candle is a confirmation of support. And then from here, we're able to close above this zone and then go up to a new zone. So I really like that resistance and that support. One of the things that I notice is that like price will test it, okay? And if it's not a high volume time, it does have trouble cracking into it. So Asian session typically has less volume, unless it's like, it's pound Aussie, so it could have high volume in the Asian session, but it probably would take like a news event or a data release or something for it to break into this during the Asian session. Otherwise, what will happen is more likely that's going to happen in like the UK or the New York session. But once we do close inside this area, it makes it a lot easier to then travel down to the bottom and eventually hit the lows, because down in here, there's other things down here that I'm going to cover in different videos, but like supply demand, where the candle impulsively left from. But know that once it closes through here, because people do this as support, and then they'll be like, oh no, I can take the bounce all the time. But then once it closes inside, it's likely to rip down to the bottom. So you can build a plan to trade these things. For me to be an uptrend, it needs to be. I'm fine to keep on trading. Like, consider all these higher closes, higher lows, higher close, higher low, higher close, higher low. I'm fine. This to me is still an uptrend until I've closed below my second most recent higher high area. Okay, so I'm going to call this like, this would be my first structure. Okay, structure 1. So if I was doing this on the 4-hour chart, I would just do this like, blue, structure 1, structure 2. Sometimes these structures overlap. Here you can see like price pushed up, came down, pushed up. Now, I don't have structure inside of here because nothing closed higher, right? So it's more of a consolidation at the top of this range. And it makes sense why it's starting to slow down, because we remember in the higher time frame, the daily, the weekly, the monthly, this was, it's pretty significant resistance. So it makes sense that price sort of slowed down up this area. But if I was going to draw a range, okay, use this wick to this support and go across. And notice how nothing's closing above it. So I'm not interested in trading or even considering this as it's a higher low, but I'm not looking to trade it as something significant on the way up. I'd be sorry, if it comes down, I'm not looking to take a buy off here thinking this is my support, because this support did nothing, it just pushed up and just started ranging. This is the more prevalent one. This is the more important one. Below this area, you can say like when it pushed up and came down and came up, we can say like this area is definitely a consolidation. So you could say that like draw across there, and you could say there's a bit of like this structure here sort of overlapping on each other. So it's of interest. If I wanted to refine this area, I could go down, say I can go to I do this on the 4 hours. I'm paying attention to these closing prices of the candles. But if I want to refine this a little bit more, I can go down to my hour, like one time frame below. And what I want to capture is I want to capture the majority of the candles. Like I could lift this up to here, and I could lift this one, drop this one down a little bit lower. That would be fine. I'll be absolutely fine in this case. But like, say it was over here and I was drawing my structure, I wouldn't want to take this area. I wouldn't want to lift it up to here, because to me that's a fake out. To me that's like, if I looked at that on a higher time frame, that's just a wick. It's not really that wouldn't pay attention to that so much on the higher time frame. I really want to just capture the majority of the candles. So usually it's going to be a combination of wicks and closing prices. That's more important to me than trying to get the high and the low. So we can see what price does. Okay, price comes, like if I drew this on the hour, so you can see price comes up and it holds pretty nicely. And then until something's closing inside here, it really hasn't got any business traveling further down into this range. It really needs to close inside underneath this area for it really to have a chance that it's going to attack maybe some lower areas. And we can do a different analysis here, and I'll cover that in more detail in other videos. But let me just go to the higher time frame, because I want to stick to daily and 4 hour here. So let's just go. So we've got consolidation up here, okay? And then if I was building a bias, and we are traveling up to here, we do get pullbacks. So especially off resistance and where pullbacks go to, they'll either go to first structure, or if they close below first structure, they can go down to second structure. If we start closing below second structure, then I think we're going to have a full correction. And that full correction will usually go to the last time we have like a deep pullback. So you can see, like, you know, if we have structural points here, this was our last deep pullback. And then we started building structure again. Okay, so then if we start breaking below second structure, okay, so this would be our first, this would be our second. And if we start closing below the wicks, the lowest point of this second structure, then I'd say we have a full correction again. Where that full correction goes to, usually goes to the last time we had the last correction. You know, that's the market sort of resetting itself. So I would say that if it started trending down from this point, if it broke below second structure, yeah, it's going to correct, and maybe it's going to start trending down to that correction point. Okay, so I've got first structure here, I've got second structure here. So first structure is my most recent. Okay, so I'm sort of counting back from the high. That my most recent was the first. The second most recent is the next one. So I can just tidy this one up. You know, we can, if you've got question marks, just take the bigger area of the range. So we can say, you know, let's use this, and let's just capture these wicks. Okay, so now if I'm here, let's just replay a bit of this, and we'll get rid of this green thing. Okay, so a support to me is really any bullish candle is a support. Any bearish candle is a resistance. For me, like if this is a support candle, I want a second one to confirm that support, that this was a true support. Because you can get times that price will just push down like this, then have a little support candle. And if we think that's going to be our support and that we're just going to start pushing up from here, then we need to be careful, because the next candle can just, you know, rip down, break the low, and then it'll be just continuation. So I do prefer to see a second candle, consecutive color candle, to say that this was a support. This was actually validating that support. If we're going to keep moving up, often this support area will be retested. So if you're in an uptrend, that's sort of giving you a first clue on what I'll be looking for in the lower time frames. I'd understand that this is support. This is a support, my confirmation of support, and that I don't need to enter a trade on the close of this candle, or even breaking the high of this candle. Because sometimes you're too far into the move. Like wait for that retest of this area. It will happen. It happens more often than not. Okay. So first candle, second candle, pushed up, broke the highs of these wicks, came down, and started testing the lows. Or not the lows so much, but like testing these support areas. That way it's sort of giving you like a natural stop loss, you know, under here, underneath your zone, if you've drawn it correctly. Gives you a pretty good idea. Same thing then, okay, we're starting to push up, but what we're doing is we're starting to fall into this like kind of wedge formation. So, you know, price is slowing down. We're never able to close higher than this wick. So I'm a little suspicious straight away of you know, if I'm going to trade at resistance, I don't want to enter blindly at this resistance. I'd rather wait for a resistance to form, such as this rejection candle, pin bar, high test bar, whatever you want to call it. But you know, that's the first resistance candle. Then I'd be looking for, you know, a consecutive candle. All right, you know, this resistance pretty strong. It held. You know, there's a resistance candle, confirmation of resistance. I don't need to enter here. I don't for sales. I'd rather just then say, all right, well, if this was a true resistance, then this resistance should be retested for then to continue. And either, you know, if it pushes back up and retests up here, then I'm looking for it to target back these lows again. And this time, you know, if this is going to be the change of the trend, and we start closing inside this area, then maybe we can start pushing down to the lows of here. So I'm starting to create like potential targets, potential entry places, and I already know where my stop loss would be. So I've built a directional bias from top down, monthly, weekly, or at this resistance, daily. You know, we are in a range overall. 4 hour though gave me that trend. Ideally, I would have liked to have got into positions on the way up to this resistance. But then now, once I'm at this resistance, I can't really justify taking longs here. I'd rather just wait till it's to close above before continuing more upside. So you got to ask yourself, what the market's trending, the market conditions are bullish, but we are at resistance. What makes more sense to be taking the trade, long or short, when you're up into these areas? Because it is against the trend, you do want to wait for confirmation. My confirmation would be resistance, confirmation of resistance. Now, if price can come up and retest this resistance, there's more downside potential than there is for me than upside potential in this current condition. So right now, I'm firmly knowing when I want to enter, where I want to enter, roughly, and I know the direction I want to enter. That's how I'd be going, starting my day by day. So I'm going to do a few more of these ones, okay? I might just leave it there for, I'm just going to leave it there for this video. I want to keep this fairly short, like 20-25 minutes maximum, just so they don't go on for too long. And I think going to be more frequent charts. There's going to be a little bit better, I think, than just 1, 2, 3 hour video. Anyway, so I'll leave it there. I'll upload it now, and cool. Any comments, just put them in the comment box, and yeah, look out for the next one. Thank you.